Hello student, our today's topic is foreign currency translation and this is the problem number 1. This topic included in the syllabus of SY become accounting and finance and TY become general commerce. This topic based on accounting standard 11. Before starting our answer, we have to read the question first. The following information is extract from the books of Sunflower Limited. There are two types of transaction: export transaction shown by green color and from this import transaction. Export transaction on 15th October 2023 exported goods worth $1 1,20,000 to Evershine Traders of USA. The exchange rate was $1 is equal to 83.25 Indian rupees. The amount were realized as follow. These are four transactions. It means there are four installments. Means this is the transaction on credit. Goods exported to Evershine Traders of USA on credit. Then import transaction. On 1st January 2023, machinery was imported from Atlas Equipments Limited of USA for $2 lakh. Payment when the exchange rate of $1 is equal to 83.50. The payments were made as follow. These are the two installments. It means this is the credit transaction. Machinery was imported from Atlas Equipment of USA on credit. After this transaction, the exchange rate of $1 on 31st March 2024 was rupees 82.50. This is the closing rate. In India, financial accounting year last date is 31st March and this is the closing rate 82.50. These are the requirements. Pass necessary journal entries in the books of Sunflower Limited and foreign exchange fluctuation ledger account. I have made the format and this format in the books of Sunflower Limited. We have to pass necessary journal entries. Date column, particulars, debit rupees and credit rupees. In this topic, date sequence is very important, so we have to follow the order of date. I am writing there. First entry, we have to check the date. We have to pass the first entry on 15th October 2023. This is the base transaction. Exported goods worth $1 1,20,000 to Evershine Traders of USA. Export, it means sales. So we have to pass the entry, credit entry, 15th October 2023. Entry, Evershine Traders account debit. 2. We can record export sales or we can record sales. Sales is always credit in journal entry because of direct income. For our reference, we have to record into bracket $1,20,000 into rate was 83.25. This is the base rate 83. Now we can record the amount. Calculation: 1,20,000 into 83.25. Right, same as it is 99,90,000 after calculation. Right, narration being goods exported for $1,20,000 at the rate rupees 83.25 per dollar in Indian rupees. Then entry number 2, we have to see as per the given information. Next date on 1st November 2023, received $30,000 and exchange rate 83.50. This is the next transaction. In case of import, next transaction date 1st January 2023. Student, we have to remember one trick for next journal entry. Every time we have to ask three questions to himself. First question, check whether transaction is export or import. So answer is export transaction. Next question, receipt or payment. This is receipt in case of export. And third question is whether profit or loss. We have to compare base rate and the current transaction rate. This is the base rate and this is the current transaction rate. You can see base rate 83.25 and current transaction rate is 83.50. It means current rate is increased more than base rate, and after calculation received 0.25 paisa per dollar to the Sunflower Limited more than the base rate. So this is profit. Entry for receipt. So bank account debit. Then party. Party is Evershine Traders account credit, and already we have calculated the profit. It means profit is always credit. There is accounting head for profit. In this topic we have to record there foreign exchange fluctuation account. This is a new accounting head in case of profit or loss, whether profit or loss. Same as per the previous entry, we have to record for our reference $30,000 into 83.50. Again $30,000 and the rate base rate 83.25. Now we can easily calculate the amount 30,000 into 83.50, and here is $30,000 into 83.25. Difference in between two, that is profit 7,500. Write the narration. Being received $30,000 rupees 83.50. We have to record the current rate 83.50. This is the entry number 2 for first installment received from Evershine Traders against the export sales. After this, next date 15 December 2023. I am giving the new color shown by green color. Again same question. First question is export or import. This is export transaction. Next question, receipt or payment. This is receipt. And third question, whether profit or loss. Same as per previous transaction. Again we have to compare again base rate and the current transaction rate. Base rate is 83.25, same as per previous, and the current transaction rate is 82.50. It means received less than the base rate, and after comparison difference in between current rate and base rate is 0.75. You can see negative answer, current rate minus base rate, so there is loss 0.75 paisa per dollar to the Sunflower Limited because of less than base rate, so there is loss. Now we have to pass the third entry. Date is 15 December 2023. This is a receipt transaction, so bank account debit. Then loss is always debit. Same accounting head. foreign exchange fluctuation account debit to the party Evershine traders account credit. Now we have to record into bracket for our reference same as per the previous $40,000 into the current rate 82.50 actual received, and here is dollar 40,000 into 83.25 the base rate. Then calculate the amount 40,000 into 82.50, and here is 40,000 into 83.25. Difference in between two, this is the loss rupees 30,000. Write the narration being received dollar 40,000 at the rate rupees 82.50 per US dollar in Indian rupees. This is the second installment received. After completion of this transaction, now we have to pass the next entry for the next transaction. As per the order of dates, next transaction date is 1st January 2024. Machinery was imported from Atlas Equipments Limited of USA for US dollar 2 lakh. First time we have to pass entry for import transaction, machinery imported, or we can say purchase on credit. The entry number 4. Date 1st January 2024. Machinery account debit. Machinery is an asset to the party. Party is Atlas Equipment account credit. Into bracket, dollars are 2 lakhs into rate was 83.50. Calculation 1,67 lakh in Indian rupees. Same right as it is 1,67 lakh. Write the narration being imported machinery of dollar 2 lakhs at the rate rupees 83.50 per US dollar in Indian rupees. This is the entry number 4. Next entry for next date. Next date 15 January 2024. So we have to pass the next entry for payment made to the Atlas Equipments on 15 January 2024. Next transaction on 15 January 2024. I am giving the next color red color. Now same as per the previous transactions, we have to ask 3 questions again, because of there are 2 types of transaction. First question is export or import. This is import, different than previous. Receipt or payment, definitely in case of import, payment. And third question is profit or loss. This is the comparison in case of import transaction. Base rate 83.50 and the current transaction rate 83.25. Current transaction, it means 15 January 2024 rate. We have to compare base rate and current rate. Now exactly opposite than export transaction, we were calculated current rate minus base rate, but here is base rate minus current rate. You can see answer is 0.25. This is profit because of paid less than the base rate 0.25 paisa per dollar by Sunflower Limited. This is payment. So party account debit, parties Atlas equipment account debit, bank account credit, and already we have decided there is profit, foreign exchange fluctuation account credit. For our reference, record into bracket $1 lakhs into 83.50 the base rate, and to bank account credit $1 lakh into 83.25 the current rate. Calculation 1 lakhs into 83.50, credit side 1 lakhs into 83.25, and difference in between two, which is profit. Credit side, it means profit 25,000. Write the narration. Paid $1 lakh at the rate rupees 83.25 per dollar in Indian rupees. Now next entry number 6. Entry number 6, again we have to check the sequence of dates. Next import transaction 15th March 2024, but here is next export transaction on 1st February 2024. As I told you, we have to follow the order of dates. So next transaction as per the given information, 1st February 2024, 20,000 US dollar, and rate was 83 per dollar in Indian rupees. Date 1st February 2024. Again same as per previous entry, we have to ask again 3 questions. First, export or import. Next question, receipt or payment, and whether profit or loss. Here is export transaction. Next, receipt because of export, income to be received, and comparison between base rate and the current rate. This is the comparison of export transaction again. Base rate was 15th October 2023, and dollars of third installment 20,000. Rate was same 83.25 in case of export transaction. I have mentioned here base rate, and then comparison with 15 January 2024, dollars are same, rate is decreased up to 83 per dollar in Indian rupees. Current rate, it means 15 January 2024 rate. This is export transaction, so comparison current rate minus base rate, answer is minus 0.25. It means this is loss. Means received 83 rupees per dollar when export rate was 83.25. So 0.25 paisa per dollar loss to the Sunflower Limited. We have to record the entry for receipt. So bank account debit. There is loss, and loss is always debit. So we have to record first foreign exchange fluctuation account debit, and 2 Evershine Traders. Evershine Traders account credit. Same as per previous entry, we have to record into bracket. Now dollars are 20,000 into current rate. It means 1st February 2024 rate 83. And here is Evershine Traders account credit dollar 20,000 into base rate 83.25. Now calculation, 20,000 into 83, actual amount received in the Indian rupees 16,60,000, and here is 20,000 into 83.25. Difference in between two, which is loss. Loss is always debit in journal entry. According to the journal entry, we can consider loss 5,000 in Indian rupees. Being received dollar 20,000 at the rate 83.25. This is the entry number 6 for export transaction. Now next entry number 7. Next transaction in case of export 15th April 2024. And next entry of import transaction 15th March 2024. It means we have to pass the entry for 15th March 2024, shown by green color. Transaction is paid $1 lakh when rate was 83.75. Again same question, we have to use this technique because of there are two types of transaction we can confuse. So we have to clearly ask himself the 3 questions. First question, whether export or import, this is import transaction. Next question, receipt or payment, definitely payment because of import. And third question, whether profit or loss, comparison between base rate and the current rate. It means 15th March 2024 rate. This is the comparison of export transaction again. Base rate was 15th October 2023 and dollars of third installment 20,000. Rate was same 83.25 in case of export transaction. I have mentioned here base rate, and then comparison with 15 January 2024, dollars are same, rate is decreased up to 83 per dollar in Indian rupees. Current rate, it means 15 January 2024 rate. This is export transaction, so comparison current rate minus base rate, answer is minus 0.25. It means this is loss. Means received 83 rupees per dollar when export rate was 83.25. So 0.25 paisa per dollar loss to the Sunflower Limited. In the books of Sunflower Limited, we are passing the entries. It means the loss to Sunflower Limited. Pass the entry 15th March 2024. This is payment. It means party account debit. Atlas Equipment account debit. There is loss, foreign exchange fluctuation account debit, and to bank because of payment account credit. Into bracket dollar 1 lakhs into base rate 83.50. We can check again. In case of import, base rate was 83.50 and current rate 83.75. It means increase by 0.25 paisa. 1 lakhs into 83.50. The calculation here is 1 lakhs into 83.75 and difference in between two, which is loss rupees 25,000. Narration we can record in short. Being paid $1 lakhs at the rate 83.50, actual paid 75. So correction is 83.75 per dollar in Indian rupees. Now after this, next entry number 8, we have to check the order of date. Next transaction, this is the last transaction, 15th April 2024, received in US dollar 30,000 and rate 83.50. But student, we have to remember one thing. This is the line. Here is closing rate. It means at the end of the financial year, rate was 83.50. On 31st March 2024 was rupees 83.50 per dollar in Indian rupees. And there is one remaining transaction. In this case, we have to record the entry on 31st March 2024. This is called closing entry. We have to calculate one working note for this entry. We have to compare whether profit or loss on 31st March 2024. Because of in India and as per accounting standard 11, we have to close the ledger accounts on 31st March 2024. So 82.50 the closing rate. I am showing you one easy technique. This is the final comparison on 31st March 2024 in case of export transaction, because of the remaining transaction is the fourth installment of export transaction. Comparison between base rate 83.25 on 15th October 2023 and closing rate on 31st March 2024, which is mentioned in the problem, 82.50. It means as per the accounting standard 11, we have to assume, suppose these $30,000 received on 31st March 2024, then we will get lesser rate as compared to base rate. It means current rate minus base rate 0.75 paisa loss will be there. Means again received 82.50 as compared to base rate. It means lesser rate. Here is we have to compare as per the accounting standard 11. This is an assumption. We can say this is outstanding loss. And next time in the new year, new financial year, comparison between closing rate 82.50 and rate on 15th April 2024, which is 83.25. It means in the next year, for the next transaction, we have to consider the base rate 82.50 and after comparison with closing rate and new rate, there will be profit. It means 83.25 is higher than 82.50. So this is the very important calculation, or we can say comparison as per the accounting standard 11. or we can say application of accounting standard 11. Now we have to record two journal entries for this working note. First entry for outstanding loss, and next time in the next year we will pass the next entry on 31st March 2024. Now there is loss, and this is loss of Sunflower Limited. According to that working note, here is loss. We have to pass entry of loss. Loss is always debit, and for accounting head, foreign exchange fluctuation account, debit. To Evershine traders account, credit. This is loss to the Sunflower Limited, definitely profit to the Evershine traders on 31st March 2024. But this is an assumption as per accounting standard 11. Into bracket, dollars are 30,000 to be received, and after comparison difference 0.75. So outstanding loss 30,000 into 0.75. Write the narration being loss on closing date. This is the entry of loss, we can say outstanding entry as per the accounting standard 11. This is the foreign exchange fluctuation ledger account as per the requirement mentioned in the problem, and this is the ledger posting according to the journal entries already we have passed. And now I am closing this ledger account. First should be taken total of the debit side and take total of the credit side. Credit side total 32,500 and debit side total 82,500. It means balancing figure comes to credit side. This is the closing amount. Write date 31st March 2024. Accounting head by P&L account. Any profit or loss transfer to profit and loss account on 31st March, and balancing figure 82,500 minus 32,500, 50,000 rupees. This is called transfer entry. Transfer to P&L account, the part of final account. After closing the ledger account, we have to pass the next entry on 31st March 2024 for profit transfer to P&L account. Entry profit and loss account debit to foreign exchange fluctuation account, credit. Amount already we have calculated as per the foreign exchange fluctuation account, which is 50,000. Write same as it is 50,000. Write narration being transfer to P&L account. This is transfer entry. Transfer to final account. This is the last entry of last financial year. After this, we have to pass next entry for next year first transaction. Again, we have to consider this working note. We have passed entry for this loss. Now in the next year on 15th April 2024, we have to pass next entry for next transaction, and in case of next transaction 0.75 paisa profit will be there. So this is the last entry of this problem. 15th April 2024. This is export transaction. It means bank account debit because of receipt. There will be profit, and profit is always credit. So we have to record next to party Evershine Traders account credit to foreign exchange fluctuation account credit into bracket $30,000 into the rate is 83.25. The new rate 83.25, and right here $30,000 into the closing rate, which is 82.50. Calculation: 30,000 into 82.50, and difference in between two, 22,500. This is the profit. At the end, write the narration: being received $30,000 at the rate rupees 83.25. So here is, remember one thing, that working note is very important. Now the ledger posting of the last journal entry. Date 15th April 2024 by bank, and amount is 22,500. This is the final answer. It means second year will be incomplete. Student, share your opinions in comment box about this answer, and for this kind of more videos subscribe this channel. I will make another videos on another topics. Thank you.